Let's try to break down the numbers here a bit, because the headline number was certainly a big one, but I thought that the manufacturing number was really surprising as well. We've really been focused on sort of the declines we've seen in that sector. You know, what is the impact from the trade fight? Positive all around?
Right. No, I think everyone going into this report was largely expecting that the trade negotiations being stalled and then maybe even just receiving this pause, but still that companies with all of this uncertainty were going to delay hiring. We're not exactly going to be increasing their CapEx. But that does not seem to be coming true in this report. So I'm a little surprised today that the markets have been so downbeat.
But the average this year for manufacturing jobs is still at only 8,000. That's much lower than it was last year. So we are seeing a little bit of a slowdown, I think, in terms of just overall manufacturing. We're seeing the ISM starting to show signs of rolling over as well. But it looks like the labor market is still the bright spot right now in the economy. And recession probably not in the cards all too soon.
Don't mention the R word, Heidi.
The main question now is, okay, what about this 50? Exactly. What about this 50 basis point cut that a lot of economists were calling for in July? We have Powell. He's going to be speaking next week, where the language is going to be very important, and we'll be closely monitoring what he says about what he thinks the state of the economy is.
Yeah, and that seems to be what's driving the markets lower, right? We saw so much of the Fed being a big driver on the expectation that come July meeting, there will be a cut, 25 basis points, potentially 50. And now, and you look at this positive jobs number, and it does beg the question, well, does this maybe pull back the case for the Fed to actually cut? If we can kind of nitpick the numbers a bit. I mean, the unemployment number did tick up from 3.6 to 3.7. What do you read into that?
You know, I'm actually not sure what to make of that unemployment number going up, especially since we saw essentially the jobless claims went down and we saw that the job creation has now increased. So that unemployment number is a little bit of a question mark. And again, but now we see the wage growth also increasing. So now it becomes, for me, as we mentioned a little bit earlier, what is the case for the Fed? Essentially to do a rate cut. Everyone was largely expecting that the jobs report was going to give that boost, was going to be that lever that was going to signal that cut. And well,
the Fed, you know, we don't pay attention to the month-to-month numbers. We look at the average, right? So the 3-month average, 6-month average, right around 170,000, still extremely strong. I don't know though. Labor force participation also ticking up as well, right? We'll have to see how the market continues to react. But if the Fed does not cut rates, I mean, we've already retreated from those all-time highs, right? So where is the market headed from here? I think that's another big question.
Yeah, and I think you make a good point, which is that this is, you know, just the month of June. And so the Fed obviously doesn't look at 1 month and say, let's make a decision on that front. It is interesting, though, to see the contrast between what we saw earlier in the week with the private payroll numbers that were a huge miss and really disappointing. So, you know, how do you sort of balance that out as well?
Well, the ADP number also isn't very indicative of what the government job report is going to entail, right? But that was a pretty shocking number. And we also got a report from Challenger and Gray saying that the job cuts in the first half of this year are the most that we've seen in a decade. So I think a lot of fear was baked in going into this. And so the market was reacting to easing. The Fed's going to ease, and therefore we're going to surge to record highs. We're seeing the sell-off today, 150 points. It is meaningful enough. But Aikiko, you brought up the point earlier as well. Some economists were saying 75 basis point cut.
Right.
Yeah,
and I want to know what they think
there's
now.
an argument to be made that maybe investors did get ahead of themselves, or not even a maybe, they probably did. What I think is interesting is, you know, over the last week, we've been talking to a lot of analysts, you know, where is the Fed going? What is the risk to the markets right now? And there have been several analysts who've come forward and said it's actually the investor sentiment, you know, the expectation getting so large that the Fed will in fact cut. You know, if you look at the data today, I think there is a fair question to ask that does this make the case for the Fed to even consider a rate cut? You know, the other question I want to know is, well, how sustainable are these numbers? I feel like it's been months since we've been asking, you know, well, where is the peak? I mean, this certainly seems to, at least if you want to just take the headline number, suggest that there's still a bit more room to run.
Miles Adlin brought up the point that there seems to be some slack left in the labor market.